Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Public Storage Quarterly Report. Public Storage is a leading provider of self-storage services across the United States and Europe. The company's business portfolio includes self-storage facilities development and ownership of storage, properties operation of existing storage facilities investment in Shurgard Self-Storage Limited, a European self-storage company with 321 facilities. These businesses collectively offer approximately 268 million net rentable square feet of storage space to customers. The decline of Public Storage stock. A year of missed expectations. Public Storage's stock price has taken a hit over the past year, declining by 10.95%. The culprit behind this downturn lies in several key announcements and market reactions. Two significant events stand out: the Q2 2025 earnings miss and the Q3 2025 revenue miss. In July 2025, Public Storage's second quarter earnings fell short of analyst expectations by a staggering 31%, leading to a 5.52% drop in stock price on the same day. The company's third quarter earnings report in October 2025 showed that while it surpassed EPS forecasts and raised its full-year guidance, its revenue of $948.93 million was significantly below the anticipated $1.22 billion, resulting in a 22.22% shortfall. These missed expectations have contributed to negative sentiment around Public Storage stock, ultimately leading to its cumulative decline over the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. On the growth side, key contributors include increased same-store occupancy rates, expansion into new markets, acquisition of new facilities, and contributions from Simply portfolio self-storage revenues. Additionally, tax benefits such as increased deduction for qualified REIT dividends, reinstatement of 100% bonus depreciation, and changes to interest deduction limits have also positively impacted revenue. On the decline side, factors include decreased contract rents gained from move-ins, increased promotional discounts given, and contract rents lost from move-outs. These opposing forces demonstrate the dynamic nature of revenue growth and decline, influenced by a range of internal and external factors. Net income and profit margins experienced mixed changes in Q3 2025 compared to the same period in 2024. Net income increased by $81,630 to $514,773, while net income per common share rose by $0.46 to $2.63. However, year-to-date YTD 2025 saw a decrease of $179,074 in net income to $1,286,975, and a decline of $1.03 in net income per common share to $6.43. Profit margins also showed some variation. The net operating income (NOI) margin increased from 73.9% in Q3 2024 to 74.1% in Q3 2025, indicating a slight improvement. However, the gross profit margin and operating profit margin are not directly reported, making it difficult to assess their changes. Several factors contributed to these changes. The gain on sale of real estate decreased by $718,000, while depreciation and amortization increased by $7,420. Equity in earnings of unconsolidated real estate entities also declined by $10,387. Additionally, an unrealized foreign currency exchange loss increased by $193,850, affecting profit margins. The amortization of Shurgard basis differential and transfer of differential to real estate facilities further impacted profit margins. The company's financial performance indicates a positive trend in its operating cash flow. In 2025, the company generated $2,452,862 in operating cash flow, surpassing the previous year's figure of $2,359,635. This increase demonstrates the company's ability to manage its finances effectively and generate sufficient cash from its operations. The company's debt level has increased significantly over the past year. The borrowing limit under the credit facility was raised to $1.5 billion, and a senior notes offering on June 30, 2025, added $875 million to the debt level. As of September 30, 2025, the principal outstanding on debt stood at $10.1 billion, up from previous periods. However, there is conflicting information regarding interest expenses. According to page 54, interest expense for 2025 decreased by $5,440 from 2024. This contradicts other pages that report an increase in interest expense. Despite the inconsistency, it appears that interest expenses have not changed significantly, with some reports showing a slight decrease and others indicating a small increase. Management is optimistic about the company's outlook, citing growth through modernization and expansion. Key strategies include acquiring new facilities, developing existing ones, and leveraging internet advertising to drive move-in volumes. The company aims to balance rate increases with potential negative impacts from incremental move-outs. Industry-wide demand is expected to increase in 2025, but management acknowledges uncertainty due to evolving political and macroeconomic factors. Management expects significant growth in tenant reinsurance operations and third-party property management business. Retained operating cash flow is projected at $650 million in 2025, providing financial flexibility to adapt to changing conditions. The company plans to refinance maturing notes and invest in energy-efficient measures. Overall, the outlook suggests a focus on expansion, innovation, and long-term sustainability. The company has demonstrated its commitment to returning value to shareholders through two key initiatives. Firstly, it has paid dividends, with a significant amount of $527.2 million distributed over the 3 months ended September 30, 2025. Secondly, the company has also engaged in share buybacks, repurchasing a total of 24,448,781 common shares at an aggregate cost of approximately $879.1 million from inception through October 29, 2025. That concludes the financial summary for Public Storage. Feel free to comment below, and I will be happy to answer them when possible.